Now, today's important discussion is Google worth investing in now, as in right now, okay? So recent issues, I want to discuss a bit with Google to explain a bit what you have been seeing in the stock price that is, creating a lot of buzz in the market right now. Now, basically, Google has been facing a series of legal setbacks recently. In a previous article, I discussed that the US Department of Justice, the DOJ, antitrust victory against Google for using illegal tactics to maintain its dominance in search. Okay. So now the DOJ is taking on Google's parent company Alphabet in court over allegations of monopolistic control in digital advertising. So these are totally two different cases. So one is basically search, and now we are talking about digital advertising, right? Basically, the DOJ accuses Alphabet of using anti-competitive and unlawful methods to eliminate or significantly weaken any threats to its dominance in digital advertising. This case highlights potential conflicts of interest as Google owns companies that operates across all sides of the market. They own the market, compete in it, and also buy and sell ads. So basically, if you own it, right, and you own both sides of the market, you can actually manipulate it because they also buy and sell ads at the same time. So the DOJ considers this setup both unfair and illegal. Now, Google has responded stating, "We will show that ad buyers and sellers have many options. And when they choose Google, they do so because our ad tech is simple, affordable, and effective." This was the exact words. In short, it works. However, Alphabet's track record isn't encouraging, as it's lost 2 similar lawsuits in the past 9 months, raising the possibility of another loss. Okay? So, what's the potential impact of these legal rulings? Now, if the court rule against Google again, they would impose changes to its business operations, potentially reshaping or even splitting the company. Now, this outcome could be detrimental, as noted in my previous report. So you have to go back to my previous report where I talked about Google, and basically I use a equal tech titan, Alibaba, and what actually happened to it and what could potentially happen to Google for that. So recently, Google also lost its 2.7 billion fine appeal with the European Union's Court of Justice for abusing its dominant position by favoring its own shopping services over competitors. While Alphabet claims to have made changes in 2017 to comply with the European Commission's decision, these may or may not influence their ongoing cases. Okay, so other than that, Google also made some strategic investments, basically in the investments in Waymo. Okay, now moving away from these legal challenges, right? Alphabet announced 5 billion investments in Waymo. It's self-driving vehicle business, basically. Waymo aims to be the world's leading autonomous driving company, currently offering 100,000 rides a week with its robo-taxis. And this 100,000 is not a small number because it has grown 100% from its previous report. So there is a huge potential in this particular investment from Google. So basically, other than that, let's look into the financial overviews. Now, Alphabet remains a relatively affordable investment among the Magnificent Seven, because I want to compare with the top 7, right? With a forward price to earnings PE ratio of 18.26, compared to a 5-year average of 23.4. So if you see that, then you see Google is cheap at the moment. Now, Google's earnings per share has been on an upward trend over the past decade. This is a very healthy thing, rising from 580 in 2023 to an expected 8.67 in the next 12 months. Now, if you look at the free cash flow per share, is also increasing. Another thing that I look at deeply, with 5.46 recorded in 2023 and 6.64 expected in the next 12 months. Now, Google's earning per share growth over the next 12 months is projected at 13.6%, with total sales showing a strong upward trajectory, increasing from 66 billion in 2014 to 307 billion in 2023. Now, Google has been conducting share buybacks since 2018, a strategy favored by renowned fund managers like Warren Buffett to return excess cash to his shareholders. In 2017, since 2017, Google has repurchased 1.5 billion shares. Okay. Now, looking into Google's return of equity, it has consistently been above 15. This is a very crucial percentage that I always look at into detail, especially with tech titans. And it has reached 27.22 to 7.22% in 2023. Now, this indicates efficient capital allocation. Alphabet is in a net cash position, further demonstrating its financial robustness. Now, according to a discounted cash net flow model, Google's conservative value is 190 per share, with a high estimate of 210. So even if I take the 190 and I put in a 10% margin of safety, the lowest value you get is 171. That suggests Google remains undervalued, making it a potential good buy at the current moment. So is this like a sure sign that you want to jump in? We need to see now. It may be cheap right now, but is it able to sustain this kind of revenue? Okay, because as long as revenue can grow, earnings can grow, sales can grow, then the stock price can grow, right? Now, I've spoken in the past. Now, if you were to attack Google, split it up, or if you put Google to the stress test by, where he has to focus on all the legal issues and stuff like that, how is that going to work? Because we also have reports coming out with regards to Google. Usually when you want to search things on the internet, you tend to say, I want to Google something. But according to a report, right, there's a saying that, the new generation, they don't use I'm going to Google anymore. I'm going to search it on the internet. They don't actually use the Google. So this searching things on the internet is not synonymous anymore with just the word Google. And there is a threat, potential threat to that. So we need to look into this kinds of data, even though that so far the financial overview seems good. Okay, so let's jump to the revenue analysis part of the Google, right? So when analyzing revenue by segments, Google search continues to grow. Now, they have been attacking Google, right? And say that it's no more, people don't use the word Google anymore to search on the internet. So the first thing I want to see is this. So with the current quarter's revenue higher than previous quarters, let me show you something. Like this chart I collected. This is the revenue analysis part of it. Now, if you look at the search and other parts, you can see clearly, I use the previous 6 quarters, right? Because the attacks are recent. And you can see a clear growth in Q1 2023. Revenue is 40.36 billion. But when it came to the search in 2024, Q2, we are up 48.51 billion. So there is no evidence that the search is being threatened. The income from the search, revenues from search is being threatened, right? So in Q2 2024, search revenue reached this 48.1 billion despite increasing competition and from alternatives like ChatGPT and Bing AI. And this demonstrates the resilience of Google search has built over the years, right? So this is something we need to see. Now, one more important thing, that because we are in the AI part of it, and Google is in a way spearheading this AI revolution. And the only way that the US will think twice before splitting Google is to, if they feel that, by splitting Google, they will actually lose out in the AI race versus China. So we want to look into the AI part of it, right? Now, to look into the AI part of it, everything you need, it has to depend on the cloud business, right? The cloud business part of it. So let's look into these things, but what could affect the performance of the cloud, and what is actually really happening right now that is causing, apart from the legal thing, the other things that is actually causing Google to, in a way, stagnate, not really pushing up, and what can happen next. So for that, let's jump into the cloud segment performance, right? Now, Google's significant capital expenditure, the CapEx, primarily on servers and data centers, reflects its commitment to maintaining this resilience, with over 12 billion expected to be spent throughout the year. All right. Now, Google Cloud, which is receiving substantial investments, saw a 38.9% revenue increase in Q2 2024 compared to Q1 2023. Now, this growth shows the justification for increased capital expenditure, which is expected to slow over time, because you can only invest that much. And when it comes, when all these data centers all build up everything already, of course, CapEx will start to drop. And that's where you see the growth, and why Google is putting so much effort into this part of it, because that's part of, really building an AI company. And you can see there is proof that the growth here is, it's a reason, 38.9% growth is not a small thing for a tech titan. Okay. So not only that, the operating margin for Google Cloud turned positive in Q1 2023 and has remained profitable since. Okay. Has remained profitable since. As such, I'm going to give you the overall outlook. Now, as these lawsuits progress, and if the DOJ does not enforce a breakup, Google's predictability, should improve. And investors, they look for predictable things. They can see, they can predict the future. That's where the real money investment comes in. So that would potentially lead to a recovery in its share price. Ultimately, the question of whether to invest hinges on the belief in Google's ability to navigate these legal and market challenges and recover at the end of the day. So you have a very clear idea I've shared with you already on this kind of things. With that, I when I send this report out, you can look at this video a couple of times, look into what I've just mentioned, look into the revenue, look into the potential. And if you think it's good, yes, Google is at the right price at this moment. Okay, so with that, that's the report for today. Let's move on to the charts.